I will start with the question about your guidance. It's already your second increase this year. How do things look at this point? Is there any more upside risk for Siemens?
Well, we increased our guidance indeed. We are looking now for a top-line growth of 9 to 11%. And the net income, which we guided for 5 to 5.5 billion, we guided now for 5.7 to 6.2 billion. So this was obviously coming from a very strong momentum in the first half year. Our Q2 results are very encouraging. Growth across all businesses. We're doing very well, extremely well in all businesses. We had a conversion here in the profitability. But we also had a very strong portfolio management and the execution. Remember, we sold Flender to Carlyle. And in Q2, we booked a roughly 900 million gain. So all in all, this gave us the confidence and also the momentum from the market that we can increase our guidance.
We've heard so many car makers, but also many other industrial companies talking about the chip shortage having an effect on their production and also on results. Is it not affecting Siemens quite as strongly?
Let's cross fingers. So far, we are running our business very resilient. We have an excellent supply chain management, and they are really extremely close to our suppliers. So I'm not saying that we don't run danger to have a shortage, but so far we managed very well. It is about the chip shortage, but we also see now, let's say, a little bit clouds in the resin market, for example. So therefore, we are watching very, very closely. We are less dependent on those chips which you are talking about. We talk about more the smaller ones, which is in danger, which are the drivers of displays. But so far, we have to say that we see no really impact, which would cut our revenue and our deliveries to our customers. There's a reason why customers trust in us. They know that Siemens is a reliable partner, also in difficult times.
What are the key verticals we should watch out for in terms of problems that could arise with the chip shortage?
I mean, you named it, automotive. These cars are meanwhile loaded with electronics and they need a lot of demand, have a lot of demand. At the same time, they're fighting, obviously, also for these chips compared to others, the IT companies, so producing laptops and the like. So I think this is the point where you have to look at. But other than that, I think it's really due to the impact which we see from the market that many markets are pulling up now. We see that this can hit anybody who is not a really stable supply chain.
What about input costs? You know, we've seen an increase in prices for so many commodities. Metals specifically have been really eye-popping increases in price. How are input costs affecting Siemens?
That's true. We have a price increase in raw materials as well, but also in the freight costs. And in our short cycle business, we have put that into our price. So we have a price increase, slight price increase in order to compensate for it. So therefore, I would say this is contained. And you can see it also from our results. We increased, for example, in DI. We increased our margin now in this quarter to a 20.1%, which is an extraordinary margin. But also the margin of SI going up to above 11%. So therefore, I do believe that we have that quite under control. But again, you have to watch it closely.
We have seen many manufacturers kind of gain pricing power as the economy reopens, partly due to bottlenecks, but also really just increased demand around the world. Does Siemens also feel an increase in pricing power? Will you be able to continue with price increases throughout the rest of the year? You know, the price increase we were talking about due to the increase of the raw material prices or freight prices is one thing. But the real pricing power comes if you are innovative. If you have innovative products, you can have a premium for your prices. And that's what we are playing. We do have technologies which are really supporting our customers
to make their digital transformation, to support them through the crisis, increase their productivity, shorten their time to market. Like, for example, in biotech, we help them ramping up their manufacturing very fast. And this is where you really can increase your price and your gross margin due to really very, very strong technology and portfolio offerings. And that's what I believe is the strength of Siemens.
What's your take, by the way, on the possibility of opening up IP for those vaccines so that everyone in the world can start to manufacture them? The Biden administration seems be behind that idea, and the Merkel administration seems against it.
I do believe that the most important element is now getting vaccination of people up as fast as possible. This is the only way, and in all countries. And this is and look into India, I think you can understand that definitely needed. And we are here to help. I mentioned to you the example of BioNTech. We help BioNTech to ramp up their manufacturing extremely fast and shorten their cycle time. And we can do that for any other company in the world. Having this learning, what we have had now with BioNTech, and support any manufacturer in the world.
You have 292,000 employees, at least. That's the latest number that I've seen, Roland. What kind of return to work can Siemens employees expect? Back in the office, hybrid work model? What would you like to see as the new work experience for Siemens employees?
We have a clear strategy, and we announced this strategy already in August last year. We said that wherever it's possible, I mean, for some jobs it's not possible, for example, if you assemble a train, but wherever it's possible, we give our people the opportunity to have 2 to 3 times in the office, 2 to 3 days in the office and 2 to 3 days remote work. We believe that this combination is, number one, driving the productivity for our people. It's appreciated by our employees. We know that. They have a very, very positive feedback that they don't have to be there. And we want to manage our people by outcome and not by presence in the office. So therefore, very, very strong support from our people. Of course, they want to come back. But the blend is really what makes the success, so that you have your productive time at home or remotely, don't have to travel so much, but then you have this, I call it always, high quality time when you come together and really have then an intense interaction, what people also need. So we believe that this is the right strategy, and the feedback from our employees tells us that we are on the right track.
You mentioned that you build trains, you also help make the vaccine, you also have a huge automotive. I mean, you've got a lot of businesses, but really, in a large part, Siemens is becoming more of a software company than maybe the market realizes, or does it? You know, we've seen the stock up 20% year to date, double over the last 12 months. Over the past 5 years, total return of 100%. Is this a re-rating of the company as a software maker, or do you think that the market still underappreciates the value that you're adding?
So we are a very unique company from that perspective. Of course, we have a very, very strong software portfolio, and we are expanding it, obviously. But the real thing is that we are, unlike any other company in the world, are able to connect the real and the digital world, and in doing so, driving productivity, shorten time to market, improve resilience and sustainability for our customers, making their digital transformation. And this is unique in the market. And again, playing in both areas, having the domain know-how. I mean, if you build something, you have domain know-how and connect it then to the digital world. This is really key. So we're very happy about our software portfolio. We're expanding it. It grew, by the way, in Q2 by 11%. We keep on having this momentum. But again, if you really can combine it, this is what we call the IoT, Internet of Things. This is really where the power sits and where the growth comes from in the future.
Yeah, I guess I really should have probably said a tech company, or I see Siemens as more of a tech company than maybe the market historically has. Are you happy with your valuation? Do you think that the shares properly value Siemens right now?
Well, guess what my answer is here. So I fully subscribe to what you say. I think we are more a tech company, which is really having a deep tech knowledge across all areas, also the new technologies, 5G, autonomous future of automation, and again, digitalization, software. So we believe, if you look at the multiples in these markets, we believe that we are heavily under-evaluated, but this is on us to prove. And so on us to prove and to show our growth rates going up, and to really prove it with excellent examples. Like we have also reported in the Q2 now, for example, in a partnership with Mercedes-Benz, where we are designing the future of the assembly line. Not only that, in making that fully automated, but also making it more sustainable and training the people at the same time. And this is supposed to be rolled out in all the manufacturing sites. So you see, this is the value which we can bring to our customers with our portfolio.